Hello again, everyone. Welcome back. In this technical analysis of the stock market video, I call it Bad News is Now Bad News. I read that in The Economist this morning, and they were talking about what's going on, and there definitely seems to be a change of mood in the markets right now. Last week, I talked about a change of heart, kind of a rotation going on with in the marketplace. But now we've got this change of mood, and now a lot of the economic reports, when it's bad news, it's bad news. So that's how the market took it, at least the last couple of days. We'll see what kind of continuation we get. We're going to focus on the Dow Industrials and the Russell 2000 today, a couple of key indicators, and then see what's going on with those four Magnificent Seven that reported this last week. The Dow on Friday down, let me pull up the notes, down 611 and down 852 for the week. So pretty hard down Thursday and Friday. At one point on Friday, it was down over 950 points. When I look at the Elliott Wave count that I've got in here on the daily, here's where I'm looking at it. I'm looking at we're trying to finish off a fifth minor wave to the upside to complete the third intermediate wave, pushing higher. So we've had a pretty deep little pullback in here for wave two, maybe about 50% or so. And I just don't think the C wave is complete when I drill down and take a look at the 130-minute time frames and the 65-minute, etc. I think we have a little bit more to go to finish it off. We'll see what we get Monday and Tuesday. Now, I'll tell you, if we were to take out these lows, the end of May low and the April lows in here, and continue to sell off, take those out, then I've got to really seriously look hard at my alternate count, which is a much more bearish scenario. But right now, I'm giving the benefit of the doubt to the bulls because that's the way this market's been acting. All right, so let's take a look at the Russell 2000. Move it back so we have the daily and the weekly showing. Here's IWM. Down 766 on Friday and down 1530 for the week. Now, that's pretty ugly. That's an ugly week. A very bearish engulfing type candle. Now, from high to low, from Wednesday's high to Friday's low, the IWM dropped 9.5%, almost 10% over a 2.5-day period. Pretty dramatic move. And the Elliott Wave picture I've got is similar in that I'm, trying to work a third minor wave of a third intermediate wave. But again, if we were to come down, continue to sell off, and take out this low right here, see if I can get it to tell you what it is, 197.41, then I'm going to be moving back over to the much more bearish scenario going on, and I'm going to say that this is failing. This resistance was pretty strong. 2 out of the last 3 weeks, we tried to burst through it and just couldn't do it. Got repelled both times. Well, actually, it's been repelled 3 times. I mean, that the 2 weeks back came right up to it and we got pushed down. So we'll see what kind of follow through we get in here. On this wave count. So that's where we sit with IWM. Let's take a look at a couple of things. I want to look at, first thing I want to look at is the high yield bond fund and see what it's been doing. And let me go back to the moving average view, look at HYG. So we've got a definite resistance zone that we had up here. We burst above it back on July 16th. Been bouncing into it, out of it, into it, out of it, thinking, well, maybe it's going to hold. Maybe it's going to stay risk on. Then all of a sudden, Thursday, Friday, risk off. 2 days in a row below the blue line, which is the 10-day moving average. And it looks like we are collapsing back down. We'll see what kind of continuation we get, but this is pretty bearish looking when you look at the weekly view. So the high yield bond fund is saying risk off. Now, another one that really showed some wild moves this week is the VIX, of course, and I'm sure some of you have seen this. Up 480 on Friday, up $7 for the week. So pretty big spike. I've been talking about the fact that we need to get above this spike over here in April to have a change in the sequence of things. And here's what I mean by that. We've had nothing but, in these weekly spikes, nothing but lower highs all along and lower lows throughout the entire sequence until this week. And now all of a sudden we've broken not only to a higher high, we've taken out the last two spike highs. So it's going to be interesting to see, do we get all the way up into this zone up here, 33 and a half to 36 and a half ish, and get some resistance? Do we even get that far? What happens? But there was a lot of people betting on volatility staying low and staying quiet. And then now all of a sudden a total change in trend. Okay, so that is what's going on there with the VIX. Let's take a look at the Magnificent Seven, the four: Microsoft, Meta, Amazon, and Apple. And I'm going to take it in that sequence because that's how they reported. So let me go back here, take a look at Microsoft first. So Friday, down 862, down 1678 for the week. Very negative picture, down 4 weeks in a row. Now, I'll tell you, where did we stop? The low on Friday was almost exactly to the low that occurred right over here. The low was 404.51. The low on Friday, 404.34. And this was the end of May, May 31st. So pretty significant. We'll see whether or not this can hold or not. We've had pretty much a hard down in here. And, you know, there's other things I've got on the chart. I've got Tom DeMark's sequential sell setup, sequential sell countdown, DeMark sequential sell trend setup. This is pretty key support by the way he looks at it. So we'll see what we get here with Microsoft. Let's take a look at Meta. Meta was down on Friday. See if I can get that. Down 960 on Friday and up 22.42 for the week. But I'll tell you, the thing that jumped out at me is this candle. They reported earnings on Wednesday night after the market. This is Thursday's price action. They opened all the way up here, ran it just a little bit. So we opened at 521 even, went to 527.17, and that was all she wrote. Came on back down, closed at 497.74 with low 492. That is not a bullish candle. That is bearish price action. That just doesn't look good. And I'll tell you what, it looks eerily similar. Now we're in a downtrend, short-term downtrend so far. It looks eerily similar to July 27th of last year, although we were in an uptrend then. That was bearish looking price action on daily, and it took a few days, but it flipped it over, and at least for a little intermediate move to the downside. So now that we're in a little more of a downtrend, we'll see what we get. It's going to be really interesting to see what kind of follow through we get on Meta after that kind of price action. Okay, let's take a look at Amazon for something really negative. Wow, down $16.17 on Friday, right down here, down $14.60 on the week. So four weeks in a row. Okay, and let me look at my notes. So what's interesting about this is, I try to, whenever I can, track DeMark's sequential sell setups, sequential buy setups, etc. So we had a sequential sell setup that completed on July 2nd. Then we got the price action flipping to the downside. Here is a key support level that we closed below on July 22nd. That's a sign of weakness, but we bounced around until the earnings were reported on Thursday night, and then we got the collapse that continued to the downside. So it's going to be really interesting to watch and see how much more of a trend. Yeah, we're getting a little bit oversold. But this is pretty dramatic in terms of what it did in here on Amazon. Now, let's take a look at Apple. So what was the news that was hitting the wire today? Bloomberg, almost everybody and their brother. Berkshire Hathaway, Warren Buffett cut his stake in Apple by 50% in the last quarter. So it's going to be interesting to see what kind of reaction it is to that. And this was up $1.50 on Friday after earnings after the market on Thursday. Okay. And up $1.90 on the week. Now, this to me is a potential head and shoulders pattern that's there. Now, I say potential because it hasn't broken down yet. And what are these dashed lines? These dashed lines are key levels of support. 214.62, 206.59, 192, 186.63. Each one of these are key levels. I'll tell you, the S&P and the NASDAQ 100 have been just slicing through their key levels like butter through hot knife through butter. And so now it's going to be really interesting to see what does Apple do. So when I look at this, we have some pretty significant divergence that's been showing up too on the daily chart anyway. So the other thing that I was looking at, watching the 195-minute time frame, I like the 195, and there are others, 130, 65-minute. But the 195-minute breaks the day into two exactly equal time frames. So I look at this as the morning session on Friday and the afternoon session on Friday. Literally, the afternoon session almost took back almost everything that the morning session was giving us on Friday after the earnings. So it's going to be interesting to see what kind of follow through do we get come Monday, and does this start to play out to the downside, because it looks to me like this is rolling over. And you can look even at volume in here. Yeah, we got a pretty good little volume kick in here on Friday with this little spike. Nothing close to, if this is a shoulder and a head and a shoulder, this looks like classic volume. Peak on the left shoulder, nothing, a lot less in the middle, and then less on the right shoulder than the left shoulder. Ideally, you'd even have like less than less, but we'll see how it plays out this coming week. Okay, that's it for this weekend. If you felt like the video was helpful, give it a thumbs up. If you're not a subscriber to this channel, hit that little subscriber button. And if you'd like more of this information on a regular basis, head on over to joehenches.net. Check out the website and the membership. Everyone have a great week. We'll talk to you on the next video.